Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. Making this video on a Friday. Is it Friday yet? Today it is. This video I wanted to go over some of the positions I've made on using covered calls to lower my cost basis. And we're going to look at some examples that you could follow today on June 25th, 2021. And looking for high implied volatility, big premiums, lowering that cost basis on weekly covered calls. In this video, I'm going to show you how to use covered calls in order to lower your cost basis, receive a pretty large amount of premium on some high implied volatility stocks, and eventually, if that covered call does exercise at the same strike price that you might have started at or even slightly higher, you could get a good amount of capital gains and also lower the cost basis, which will be bringing in income every week after week or every month after month. So the key part of this strategy is to find a stock that has pretty high implied volatility. That means that the stock price could be moving up and down pretty drastically in the short term. And you want to get a good enough premium where it's worth lowering that cost basis, because if the stock does drop a bit, at least getting that premium week after week or month after month will lower the total amount of cost of your position. Also, you want to make strike prices that are usually slightly higher than the initial purchase price. If you want to be a little bit greedy, you could go way above the strike price and you could possibly get some large capital gains if the stock moons and goes crazy. I prefer to go a little bit higher than the cost basis because it receives a large amount of premiums. So let's go over a few of the examples I've done in the last few weeks where I essentially bought shares and then sold covered calls slightly above the cash basis. As you're going to see, for some of these positions, the returns and their premiums are pretty dramatic. We're talking 4 or 5% a week in some cases. Okay, for these positions that I've made in the last few weeks are highlighted in blue, or covered call positions where either initially owned a position from a cash secured put, I might have got exercise and then sold covered calls, or I actually started some of these positions with a buy right. In that case, you buy 100 shares of the stock and then write a covered call. If you are interested in all of these positions, and you can see my full spreadsheet, which I update in real time, I have one of my members already looking at it. You can join my Patreon page. The description is down below. And in real time, again, show my trades, private Discord where I go over why and the reasons why I make these trades. So if you're interested, think about joining that Patreon. For IVR, one of the first ones I did, this is a mortgage REIT. On 6/14, I started the position with 8 covered calls. I made a weekly expiration from 6/14 to 6/18. Stock price is $4.23 at the time. I sold a covered call at $4.50, so a little bit higher than the initial purchase price. And then I received $134 in premium. $134 in premium over 8 positions was $16.75 per position in 1 week. Now, if you take the $16.75 and divide it by the $4.23 share price that I initially bought it at, we're looking at almost a 4% return in 1 week. What this also does is it helps lower your cost basis by that same $134 in the 800 positions. In this particular case, I did buy to close this at only $16 at $2 a position, made a profit of $118 at the time. The stock did decrease a little bit, but what did I do? Make another covered call. So I did one for $6.25, made $112 in premium, so very close to last time. Bought to close it at $32, $80 profit. And then I did a third one that I'm currently in. 6/21, made one for $7.02 to a 2-week expiration. Stock did go down to $3.88. That is one of the downfalls to doing this with high implied volatility positions, but I'm willing to wait for it to increase back up. Did receive $80 in premium for this particular position. Now, if you look at IVR stock, they are going to be paying a 9-cent dividend pretty shortly. I think the ex-dividend date is early July. It is creeping back up, $4.11. But one of the keys to the strategy is lowering your cost basis. So when you look at my current cost basis on IVR, we're looking at $3.92. So it's a lot lower than what the initial stock price was when I started the position. For this IVR position, I'm going to continue to sell covered calls at the $4.50 strike price. Again, it's hovering at $4.11 right now. I'm willing to wait because I am lowering that cost basis every time I do this position. And by doing that, I definitely have a bigger cushion from when the stock price might be even or maybe goes slightly downward. I think over a long period of time, maybe in a few months, it might go back to $4.50. Then I'd close that position with a slight net gain in the capital gains because I started at $4.23 or so. So I'll make a few, $100 on the capital gains, but I could possibly make even more money by selling these covered calls week after week or every 2-3 weeks at times. Okay, here are a few other covered call positions that I am lowering the cost basis with. I have GNUS, 15 positions. $1.97 current price. I did a strike price of 2.5, which was my initial price when I started on the cash secured put side. Made $270 premium in a month and a week. So good overall premium compared to the return that I have. If you go 270 divided by 2.5, 108. But then it's divided that by 15 positions. So looking at a 7% return in a month for a position I'm willing to wait on. Another one was VIPs. VIPs did decrease quite a bit, where I started at the 25 cash secured put, and it dipped. VIPs dipped down to 1832. It's starting to come back up to around 20 right now. I had to sell a covered call at 25 here. Only made a $15 premium, so this was not necessarily the best one that I've had so far, but willing to wait for it to come back up. If the stock goes near 23, 24, the covered calls at 25 will pay very handsomely. BBIG is another one that I'm interested in. It's a pretty small cap stock. Stock price was at $4.91, and I sold almost a monthly covered call at $5.50 strike. Made $157 off 3 positions. So another good return. 157 divide by the 4.91 that I started the position at, and then divide that by 3 positions. We're looking at 10.6% return if it stays at the same $4.91. If it goes up to $5.50, I would have to add on the extra gain of the difference of these because I would be selling my position at $5.50. Another one that I'm looking closely at, and I'm making this video right at market open on Friday, the WISH position, bought exactly at 14. I did a 2-day covered call at 15, so very close to the initial strike. This was for 2 positions. I made $137 in premium in 2 days. If you look at the WISH stock, right now it's at $13.94, so pretty good chance that it's not going to close at 15, though you never know. We'll see what happens at the end of the day. But if it doesn't, then I'm still having my 300 shares of WISH, and then I could sell another covered call week 2 after. I did do another one of WISH where I went to a month and a week expiration all the way out to 7:30. For just 1 position, I made $154 in premium, and I made my strike price really high here just to see what will happen if WISH gets memes and goes to the moon. And I happen to hit at 25. I'll be very happy because I'm going from 14 to 25 in the capital gain, and I made $154 in premium. The delta on this is only 0.33, which means 1 in 3 chance that this might actually happen, which I'll definitely take it. So for WISH, I'm doing 2 different positions here where I'm looking at strike prices pretty close and trying to receive a large amount of premium to lower the cost basis. And then I'm trying one out where it's definitely further out in strike, still receiving those premiums, still lowering that cost basis, and might get a much larger capital gain. Next, let's look at what the future covered call positions will look like for IVR and WISH. You could get in on this today if you want on Friday. Again, the share prices might fluctuate a bit because these are high IV positions, but let me show you how you could earn a pretty high percent in premium and again lower that cost basis. Okay, here's a WISH position that I just mentioned earlier. Right now the stock's at 1404. Again, it could easily change as you watch this video, But right now, if you go to the July 2nd, so a little over a week expiration, the $15 call is paying $110 at least. Maybe you get $113 out of it. So the rate of return on this one, if you buy it at 1407, you make $110. 110 divided by 1407, and you're getting a 7.8% return on the money you're putting in a week. Now, if it does hit 15, you're making from 1407 to 15, you're making another $97 on top of the $110 premium. If you want to go a little bit more conservative and maybe a $17 strike, nothing wrong with that. You can still make $70 in a week. So 70 over 1407. We're still looking at a 4.9% return in a week. I'm chuckling a little bit because these premiums are so high for, it is a pretty high volatility stock, looking at 180s, but these premiums are really large. Another one to consider is IVR. IVR is paying a 9-cent dividend in a few weeks as well. If you want to go to July 2nd, stock price is at $4.12. You see, I do have a $4.50 covered call right now. You can still make $10 off it. So if we go 10 divided by the purchase price of $4.12, still getting a 2.4% return in a week. And you do get a slight gain, about $37 gain, if it gets exercised at $4.50. So these weeklies are very high. If you want to not trade as much and go about a month out, the IVR at 450 is still paying $24. 24 divided by the $4.13 strike price, so you get 5.8% return in a month. So definitely very high returns on these particular positions. Okay, here's a WISH position that I just mentioned earlier. Right now the stock's at 1404. Again, it could easily change as you watch this video. But right now, if you go to the July 2nd, so a little over a week expiration, the $15 call is paying $110 at least. Maybe you get $113 out of it. So the rate of return on this one, if you buy it at 1407, you make $110. 110 divided by 1407, and you're getting a 7.8% return on the money you're putting in a week. Now, if it does hit 15, you're making from 1407 to 15, you're making another $97 on top of the $110 premium. If you want to go a little bit more conservative and maybe a $17 strike, nothing wrong with that. You can still make $70 in a week. So 70 over 1407. We're still looking at a 4.9% return in a week. I'm chuckling a little bit because these premiums are so high for, it is a pretty high volatility stock, looking at 180s, but these premiums are really large. Another one to consider is IVR. IVR is paying a 9-cent dividend in a few weeks as well. If you want to go to July 2nd, stock price is at $4.12. You see, I do have a $4.50 covered call right now. You can still make $10 off it. So if we go 10 divided by the purchase price of $4.12, still getting a 2.4% return in a week. And you do get a slight gain, about $37 gain, if it gets exercised at $4.50. So these weeklies are very high. If you want to not trade as much and go about a month out, the IVR at 450 is still paying $24. 24 divided by the $4.13 strike price, so you get 5.8% return in a month. So definitely very high returns on these particular positions. And one of the key points when doing this is you want to make sure you set your covered calls at least what the strike price is. If the stock ends up tumbling, let's say IVR goes down to 2 or 1, then you can consider selling covered calls at whatever your cost basis is. To figure out your cost basis, you just take the price that you bought the shares at and you subtract the premiums. If you do have one position, pretty easy to do the math. If you're doing this with multiple positions, then you just have to divide by the number of contracts you did. So if you're interested in more positions like this, I show these all the time on my Discord group and Patreon. It is still free for the rest of June. If you're interested, you can feel free to join in July, where the month will be free in July. And if there's any questions, leave a comment down below. Like, smash, all that good stuff. Been great helping you guys out. Be good out there. Be safe. Earn some money. And talk to you guys next time. Have a good one.